Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. It's Friday. We made it to the end of the week, and oh, what a week it was. We had that CPI number where the market shot right up on that. Then the Fed raised that 50 basis points, and the market's been coming down ever since. What's going on today? Well, we're down about 500 points. 500 points on the Dow, about 150 down on the NASDAQ. Now, today is option expiration day. So we're going to get some volatility in the market. But let's talk about the SPY. Well, on that CPI number, the SPY shot up to 410. Now, that was really a gift for short sellers. All the short sellers have piled on. And we've come down there, I'm just using rough numbers, down to about 380. Now, we're down here on the 50-day moving average on the S&P. We broke through the 200, crashed back down through the 200, and now we're sitting on the 50-day moving average. We're going to get a little bit of a bounce here. Now, how high is the bounce going to be? Well, let's just use rough numbers. We were at 410. We're down here around 380. We're going to bounce off this 380 levels, my prediction, and we'll bounce we'll recover half of what came down. So 410, 380, that's 30 points. So we'll bounce 15 points upward. 380 will go to 395, but we still are going to go a lot lower. People don't get that. Now, the 380 to 395, maybe they can call that the Santa Claus rally, but this market's coming in. It's coming in. It's going to make a new low on the QQQ on the NASDAQ and probably also on the S&P. The SPY will probably hit a new low before it gets a chance to rebound higher. But right now we're coming in and we probably aren't going to bottom out till sometime in January. Now, yes, we may get that little bit of a bounce, and you can call that the Santa Claus rally. Everybody's still talking about the Santa Claus rally, and maybe that's the bounce that they'll call the Santa Claus rally. But I think the market's going to come in now. Can they hold it off till the first of the year? I suppose they can. I mean, maybe we move sideways for a while, but the market is going to go lower. The market is going to make a new low in the NASDAQ, a new low in the S&P. That's just the way I see it. That's my take on the market. Now, you may have a completely different take. All right, so let's move over to talk about the real estate market. Now, there's been a lot of talk about, that the Fed's going to pivot, so there's not going to be a crash in the real estate market. Now, I think a lot of people are confused on that term pivot, right? Okay, so pivot, they think like the Fed was raising by 75 basis points. Now we're raising by 50 basis points. That is not a pivot, right? A pivot is where the Fed actually stops raising and starts lowering, where they lower the interest rates. We're not anywhere close to a pivot yet. Now, this big rally in the stock market was based on chatter about the Fed pivoting, but they're realizing the Fed's not going to pivot for quite a while. Still got inflation running high, and I don't really know if you want the Fed to pivot, because once the Fed pivots, that's where the crashes happen. That's where the crash in the stock market will happen. That's where the crash in the real estate market will happen. We're not going to crash as long as the Fed doesn't pivot, but eventually the Fed will pivot and start lowering rates, and the reason they'll do that is because things get broken. The Fed has to pivot, all right? And that's where the markets will start to come down. Look, in 2008 is where the Fed pivot. The housing market bottomed out 2012, 4 years after the pivot. Now, I think we're only going to bottom out probably 2 years after the pivot. We're going to go down faster because we went up higher. Okay, we went up faster, right? All right, so I want to talk a little bit about, the state of the economy here as it pertains to the housing market and why I believe that the housing markets are going to drop by 50%. Okay. So right now, this is amazing to me. 63% of households in the United States, 63%, they live paycheck to paycheck. I mean, if they don't get a paycheck, they can't pay their bills. Now, Citibank came out and said there's going to be 2 million people laid off in 2023. 2 million layoffs. Now, I got that much closer to 3 or 4 million layoffs, but let's go with Citibank's number of 2 million people going to be laid off. I think Citibank they just don't want to scare you. Look, I don't mind scaring you. It's going to be about 3 or 4 million people are going to lose their job in 2023. possibility. It's called a recession. It could be a lot worse than a recession, but we can't say the D word. They get really upset. People get scared. Get scared when you say the D word. But a lot of people are going to lose their jobs. Now, 63% of households right now cannot pay their bills. Now, how are they going to make their mortgage payment? These 2, 3, 4 million people that are going to be laid off, how are they going to make their mortgage payment? Well, they're not going to make it. That's the problem. You see, houses are going to be forced into the market. They're going to be forced selling, going when people cannot afford to make their mortgage payments. Okay, and when you get laid off, you don't have money to make the payments. Now, maybe the government will step in and make everybody's payment. I suppose that's possible. Send that inflation number way up if they do that. But that's a possibility, right? Well, maybe the banks will let you go into forbearance again. Well, that's a possibility, but there's going to be a lot of problems. A lot of problems coming to the real estate market. A lot of problems coming to the housing market. Housing prices are going to come down. They come down about 10%. We're going to hit 40, 50% down. Now, people say, well, Mike, that's nothing. We just went up 40%. And I agree. That's why 50% may be a conservative number. Maybe we come down farther than that. Now, I also want to talk a little bit more about the state of the U.S. economy. Now, what we're getting right now is a lot of multi-generational households, meaning the kids are living with the parents or living with the grandparents and the granddaughters. I mean, they're all living together. They're all coming together in the house. Now, why are they doing this? Because they can't afford to live in separate houses anymore. Now, the number of people age 18 to 29, 50% are still living with their parents. Now, when I was 18 years old, I moved out of the house and I never looked back. I never went and moved back in with my parents. But today, 50% of the kids between 18 and 29 are living with their parents. Now, you haven't seen this, or you haven't seen these types of numbers since the Great Depression. Now, there's that D word again. The Great Depression is the last time this happened. And the reason it happens is because they can't afford to pay the rent. They can't afford to buy a house because the mortgages are too expensive. Houses are basically unaffordable. Now, one out of four people aged 26 to 41, now these would be the millennials, have moved back in with their parents. Look, we're in tough times out there. People can't make it. They can't survive because things are not affordable, right? Okay, houses are not affordable. Look at the average price home. It sells for about $440,000, something like that. You need to be able to make over $100,000 just so you can buy the average price home. Now, only 13% of people make over $100,000. Now, if you go to Los Angeles, you got to make over $200,000. You got 2% of people in Los Angeles that make over $200,000. Now you come to the Bay Area, you got to make $400,000 to be able to afford a home. You got 1% of the people making these numbers. Look at this is not sustainable, right? It's just not. It's not sustainable. The prices will come down to reflect this. Now another sign that we're in like really bad times, really bad times. All right, Goldman Sachs just came out today and announced that they're laying off 4,000 people. Now that's 10% of the Goldman Sachs workforce. Now it's worse than that. They announced that they're going to be cutting the bonuses this year. This is Goldman Sachs. Goldman Sachs, when they're in trouble, these are the high-end luxury people, right? They're in trouble. The prices, they can't afford things either because they're getting laid off. 4,000 of them are going to be out of their jobs. Now those 4,000 people probably own a luxury home. Now, if they can't make the mortgage on that luxury home, it's going to be dumped onto the marketplace. That's just how it works. That's the way it plays out, right? All right, now I want to talk a little bit about, well, let's just go into commercial property. Now, what does that pertain to everybody? That's not the housing market, Mike. All right, well, let's just talk about it. I'm not a commercial expert. Apparently, there's a price indexes for commercial also, right? And it's like a Case-Shiller for the house. They have them for commercial properties. Well, commercial, which is amazing to me, that shopping centers are down 25%. They've lost 25% of their value. And I'm surprised that it's only 25%. When you think about it, you got 41% of small businesses not paying their rent. So all those tenants in the mall, 4 out of 10 are not making their rent payment because they have no money. So why is the price only down 25%? I don't know. I'd say it should be down at least 40% because 40% of those tenants aren't paying the money. So that's just there. All right. So then you got office buildings, right? We got office buildings now. According to the index, it's only down 15%. 15%. That really shocks me. I would guess it's going to come down a lot lower, and maybe it still will. But right now, it's only down 15%. And once again, if there's no forced selling, well, people have to get out. Like, I know a couple people, they own office buildings, and they're trying to get them refinanced. Now, they can't get the loans right now because they went from 3 to 7%. So these people now, they got a choice. They got to either pay that 7%, which they can't really afford because it doesn't make the numbers work out for a good investment. So they want to sell that office building as fast as they can. They put it on the market, but there's really not a lot of buyers. So I think there's a downward spiral there too. Now, is it a good time to buy a house right now? I'm a real estate broker, in full disclosure. A lot of people ask me the question, Mike, is it a good time to buy? And as a real estate agent, I'm supposed to tell you it's a great time to buy. But I can't do that. I can't do that. A lot of these people are my friends, and I want them to stay my friends. I want them to stay that way. So I tell them, no, it's not a good time to buy. You're going to catch that falling knife. Look, we're only down, 10% in the housing market? That's nothing. We went up 40%. We've come back down 10%. It's got a long way to play out. It's going to play out. Believe me, it will. Just got to be patient. You sit back. You will be rewarded. You got to buy now. That's a completely different story. Look, if you have to buy now, you're going to be the one catching the falling knife. You're going to be what's known as the bag holder because you're going to be sitting there with the house that goes underwater. 250,000 people that bought houses this year are already underwater. That's incredible to me. Now, of course, that number is small because it's going to be 4, 5, 6 million people are soon going to be underwater. They're going to have that negative equity, and there's going to be forced selling coming onto the marketplace. There's no forced selling yet. These are the glory days. You can almost get what Billy Bob got if you put your house on the market right now. Billy Bob got out at the top. You can get out close to that because it's going to go a lot lower. Now, once again, this is just my opinion. There's a lot of people that think the Santa Claus rally's coming in the stock market. Maybe they think a Santa Claus rally's coming in the housing market. I don't know, but that's what they believe. My take is the opposite. We're coming down. We're coming down. We're coming down. If you like this stuff, give me the thumbs up. Why not? Why not? It's Friday. Get out there. Have a great weekend, everybody. Hit the subscribe button because I want to talk to you next week. Bye-bye now.